This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachordoudias. Thanks for joining us at XM.com. The currency and equity markets remain frozen in a holding pattern, unable to break out even after the Fed announced it will start selling the corporate bonds it bought last year when the credit sector was in tatters. This serenity in the markets likely comes down to how small the Fed's corporate bond portfolio is. The central bank holds only a few $1 billion of these bonds, which is a drop in the ocean. Its actions were always symbolic in this field. By stepping into the corporate bond market during the darkest days of the crisis, it signaled that it will backstop the entire sector if necessary, which was all investors needed to calm down. While the amounts are insignificant, the signal is equally important this time. It highlights that the Fed is moving towards tapering its actual QE program, something that Regional President Harker confirmed yesterday by saying it is time to at least think about tapering. He is the fourth FOMC official to make this suggestion. The overall market might be at a standstill, but oil prices didn't get the memo. Crude keeps powering higher with a little help from OPEC's silence about future production increases and a rapidly improving demand backdrop. In addition, some players seem to be betting against a U.S.-Iran nuclear deal. While the message from the various diplomats remains optimistic, news that Iran continued to enrich uranium during the negotiations may have led some investors to conclude it is negotiating in bad faith and therefore bet against a diplomatic breakthrough. Crude oil's fortunes now hang on the outcome of these talks. Elsewhere, the meme stock mania has returned with a vengeance. Shares of movie theater chain AMC gained 95% yesterday alone, pushing the gains for the year beyond 3,000%. What started as an epic short squeeze has matured into a proper casino where hordes of small traders weaponize call options. As for today, the spotlight will fall on the ISM non-manufacturing PMI. Markets will pay close attention to how inflationary pressures are evolving and how the labor market is doing ahead of the non-farm payrolls report tomorrow. Similarly, the ADP employment report will give us another clue about the job situation, even though the correlation with NFP is rather weak. This was today's Daily Market Comment. Thanks for joining us at XM.com.